We had the NSE All-Share Index move higher yet again yesterday. Things still pretty tentative and investors cautious. So what's your take on the markets a week on from when we last spoke to you?
The market hasn't really changed a week on. The volumes are still a bit thin. What we're seeing is that, especially in the banking sector, there's a lot of activity based on the Q1 results that some of the rescue banks have come out with, which are positive, as well as anticipation of AMCON being passed by the National Assembly last week as well. But there's still some uncertainty in the market, and the volatility will continue.
Well, really hard to talk about anything with, just so much still pending. But in the banking space, we had First Bank and UBA succumbing to some selling pressure yesterday with losses over 2% each. Let's talk through some of the sentiment around these two stocks in the first place, First Bank and UBA.
First Bank is one of the strongest banks in Nigeria, and it's seen as really one of the establishment banks. I think the issue with First Bank is that we expected them to announce more detail on their planned move towards the holding company structure, which they said was on hold, depending some issues, especially on tax, sorted out by central bank. There have been no real movements there. There's also First Bank is also going through re-engineering of its various departments. It's trying to reinvigorate its investment banking and capital market section, and it's seeing a lot of active hiring in that area. But I think investors are still waiting to see what the next big plan is for First Bank in that sense, and the strategic move going forward. Mm-hmm. In terms of UBA has got his Africa expansion plan, and that's going on quite strongly. Its Q1 results were not as strong as a lot of its competitors, especially GT and First Bank. And so I think investors are looking to see going forward whether the Q2 results are going to be stronger, especially with UBA as well. We're seeing a change of leadership on the 1st of August.
Let's take a look at that, because along with UBA, we've got Zenith and Skybank also seeing new CEOs taking over the reins. Any concern for you about continuation of strategy or management policy there?
I don't think so. I think what Sky, UBA and Zenith have done is their appointees who take over are long-term senior management figures. So they're both internal appointments. They've been with both institutions for a long time, all three institutions for a long time, and no analyst sees them changing the strategy that much. It will continue along the strategy that have been put forward by the MDs that are leaving. So don't see that much change, especially in the near term. As the new MDs secure their positions in the banks, you might see a slight change.
Well, a lot of these news developments, nevertheless, have been factored into these share prices already. Things are so mixed at this stage, with upticks and losses, very volatile on a daily basis, Kayode. So what are we looking at in the absence of any real catalysts driving sentiment here? What are we looking at in terms of the way investors are playing the markets right now? Is it just on the basis of pure caution?
A lot of investors are looking at it as pure speculative. As shares go down a certain amount, they buy in and then sell to make profit. I think most savvy investors are probably looking through their themes. If you look at Nigeria for the second half of the year, there are three themes that I think that come out: elections, infrastructure, and reforms. In terms of elections, there's normally a lot of spending around election time, which improves disposable income of the economy. So you see the food and beverages sector trying to improving, and revenues improving in that sector, especially in places like ICT, like companies like Charms. They normally have a lot of election contracts to do with ICT. So you could see their revenues increase in the second quarter of the year, which could provide performance. In the infrastructure space, you see the cement, especially in terms of power and what they want to do in the Niger Delta. So you see building materials and cement companies and construction companies like Costain, which is doing rehabilitating the railways, and Julius Berger, which is a big government contractor, doing well in that sector. And in terms of reforms, we expect petroleum deregulation to come into play. And so they look at the petroleum marketing companies and see them, especially the likes of Rwanda and AP, doing well in the second quarter of the year, if that happens.
Well, certainly Costain and Julius Berger consolidated on previous gains in yesterday's session with a 4.9 and 3.8% markup of their respective prices. Along with them yesterday, Ashaka Cement booked the lone gain of the full maximum 5% allowed on a day's trade. Let's talk through the company's support base on a fundamental basis as you see it, that of Ashaka Cement.
Ashaka Cement is a medium-sized cement company in Nigeria. They have strong fundamentals, and what they've managed to do is they managed to maintain a steady, because the main problem, a steady output. Because the main problem in Nigeria, a lot of cement companies have, especially Lafarge have mentioned it, BCC Cement have mentioned it, is they have power problems. And when they have power problems, they have a cut in production, and that affects their bottom line. But we're seeing a lot of expansion, especially at Shaka Cement. They've redone their production lines, and we see steady progress in their continued growth.